Friends, have you ever had those trades that look perfect at first but then end up going nowhere, leaving you frustrated? In this video, I like to share a straightforward trading strategy using 3 indicators. It finds high probability opportunities before the big move even begins. It relies solely on the indicators lining up just right. When they do, it's like a warning sign that profitable moves are coming soon. With the right settings, these indicators give us an early heads up that powerful, profitable moves are imminent. I'll show you the specific indicator settings I use to spot these warning signals, along with a step-by-step system for entering and exiting trades. If we follow this plan, I believe you'll start capturing more winning trades, building your account balance, and trading the way you've wanted all along, with simplicity, clarity, and real profits, not wasting opportunities. So let's get started by adding the Turtle Trade Channels indicator to the chart. Once you've added it, you'll want to adjust the settings. To do that, go into the indicator settings and in the Style tab, uncheck everything except for long and short. Then on the Inputs tab, change the entry length to 45 and exit length to 20. Now we could enter trades based on the long entry and short entry signals. But hold on, let's not start trading just yet. Even though this indicator seems pretty nifty, we'll still want to filter out some of the signals, like the same signals shown here. Alright then, we're now gonna add the linear regression slope version 2 indicator from the indicator section. Once you add it, an oscillator like this will appear on your chart. We'll now need to tweak some changes. So head into the indicator settings and in the input section, just leave all parameters at their defaults. But in the Style tab, follow the changes I make step by step. With these adjustments, if a buy signal appears on the chart and the indicator histogram is green and above moving average, that buy signal is confirmed. And vice versa, if a sell signal triggers and corresponding histogram is red and below moving average, that sell signal is confirmed. For instance, in that case, a buy signal appeared on the chart but the corresponding histogram wasn't red. So the signal was rejected and the market didn't have enough power for an upward move. In the next one, a sell signal appeared on the chart but the moving average was above 0, so the signal wasn't confirmed. But in the next example, the buy signal with a green histogram above the moving average was confirmed. Here, both buy and sell signals were properly filtered by the indicator. In fact, in this case, the trader was prevented from taking a loss. Now, to complete the strategy, we'll need to add the black flag indicator to the chart. Then in the indicator settings from the inputs tab, set the indicator's time frame one level higher than the chart time frame. So in this case, we'll choose the 15-minute time frame. Next, change the trail type to unmodified. And then set the ATR period to 200 and the ATR factor to 6. Next, in the style section, only leave the last plot background enabled. Now with these adjustments, you can consider buy signals as valid when the price is above the green black flag indicator, and vice versa, a sell signal is valid when the price is below the red black flag indicator. The black flag indicator acts as a filter to confirm or reject signals from other indicators based on where the price action is relative to the green or red lines. Now it's time to define the rules for getting into trades. To enter a buy trade, you'll first need the turtle indicator to give a long signal. Then the price action will need to be above the green black flag line to make sure there's uptrend momentum. Next, the histogram indicator for linear regression slope will need to be green and above moving average. If all those conditions are met, the buy signal will be valid and you can open a long position. Then place your stop loss below the most recent swing low. And after that, aim for take profit target that's 1.5 times the size of your stop loss. And to get into a short position, you'll first need the turtle indicator to give a short signal, indicating a potential down move. At the same time, the price will need to be below the red black flag line to confirm downside momentum. And the histogram for linear regression slope will need to be red and below the moving average. If all those conditions check out, the sell signal will be valid and you can enter a short trade. And now place your stop loss above the recent swing high. And set the initial profit target that's around 1.5 times the size of your stop loss. But ultimately, if you're still unsure how you can become a consistently profitable trader for the long run, then I would highly recommend watching this recommended video.